Yo, boys. I hope everyone's doing well again, man. Show the channel. Basically, I want to do a video on stacking up trading confluences. So we all know about trading confluences, obviously. Things like an imbalance, an order block, daily bias, sweeps of liquidity, retests of fair value gaps. Yeah. So I'm just gonna go on the lower time frames. Actually, we're on it hourly. And I'm just going to run down some confluences that I use. Don't know why that's there. So let's run this down real quick. I'm going to write it out for you lot. So, imbalance. This is a part of the free course I'm doing as well. Just so, like, people who are actually watching my videos, man, properly, and they're not just, like, coming to see just a little bit and then leaving. I really want to bring some value to you lot, man, because I'm 12 months into my journey. I've definitely got a lot of experience in the market so far. Some good experience. Imbalance, order block, daily bias. What else should we do? Sweep of liquidity. Right, so there we go. Imbalance, order block, daily bias, sweep of liquidity. That right there is a strategy. You wait for the sweep. For the break structure, it'll be on the lower time frame. The retest of the fair value gap, and then price flies. So let me go through this one. Out of trend line, in a trend line. You can also use trend lines as well. I like to use trend lines. Right, so imbalance first. Let me go over some imbalances right now. Just where price ran through imbalances. Good to go on the lower time frames for this. I probably need to delete some stuff off. I don't know why these boxes are still on here as well. I just want the lines for the days, not the boxes. We don't need labels either. Alright, okay. So imbalance. Also, from this video, just go into everything I go through. Just use it yourself, man. You know what I mean? So imbalance. An imbalance is basically like this, where there's no space, like there hasn't been a wick invalidating the candle, and this still needs hit. So that right there, that imbalance gets taken. This is easy stuff. Imbalance here. Price also runs through this imbalance. Taps into it after running through this one. You see what I mean by the imbalance? It's like, see 1, 2, 3. Here's your imbalance in the middle. 1, 2, 3. Here's your imbalance. Where there's no wick. It's just solid candle. Nothing's coming and invalidating this. So let me give you an example of what wouldn't be an imbalance. This isn't an imbalance here. That's not an imbalance. See, we've got this wick coming all the way up. That invalidates this candle, so that isn't an imbalance. But this would be an imbalance. Candle behind it. And what happens? When price retraces into this area I've got drawn out, where does price want to go after it's hit that level? Drop it in the comments before I tell you. Where does it want to go after it tests that level? It wants to go through the imbalance, because that's the closest liquidity right there. Look at that trade, that reaction. Stop loss just above the highs, through the imbalance. Where can we target? What have we got here? We've got lows to target. Target the low. This is really not hard. Look at that right there. That's 37 pips off what targeting an imbalance and a reaction, getting entry off reaction off of this zone we got marked out, knowing we're in the downtrend and then aiming for this imbalance and a liquidity pool low. Come on, boys. I'm bringing value. You need to really go through this stuff. Let's go through a few more imbalances where prices ran through. Because they're everywhere. Look how many there is. See, I'm trying to go through imbalances where prices ran through that liquidity. We had a big imbalance here. What did price do? Came and take the imbalance. It came and take that liquidity. When price taps in off the imbalance, where does it go? Back up to my trend line to sweep liquidity. Test it again. We don't break structure to the upside, and price drops. And where does it go? It breaks through the imbalance. Breaks through the imbalance. Another one. Targeting liquidity everywhere. Oh, sorry about that. Imbalance, imbalance, imbalance. Order block. Order block. These are imbalances. This is an order block. An order block. Let's move from imbalances. Let's go to order block. Was my actual, wasn't it? I don't know why that thing's went, but yeah, it's an order block. So an order block gets created when there's been a change in trend. See how on the low time frame price starts changing the trend. We break above that last high, lower low, lower high, low low, high high. You get what I mean? Order block. Order block is basically the order block is the candle that changes the trend, that starts off the change in the trend. So here it's this candle from the downtrend to change it to the uptrend. And this will always get ran through. It will get reacted off and price will. But look at this. Another imbalance here. It gets tapped into. Boom. Buy. Buy, 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 buy. You don't even have to enter it. You can wait for the retest and get a way better entry. Target the trend line. It doesn't hit all the way to the trend line. But taking partials there. And what's price running through here? When price is coming higher, what's it going through, boys? What is price trading through? Imbalance. Oh, actually, that's also an imbalance here. Look at this here. Look how nice that is. I want to see if this gets hit because that is like a really, really, really nice zone right there. That's a good place price can come back up to. It's a very good place price can come back up to. Just that imbalance right there. If price goes bullish, we can target that. You see what I'm doing here, boys? When I'm trading, I'm not just trading blindly. I know where price is coming for. One of my problems for a long time was when I was trading, I was like kind of only looking for like the sell side, and I wasn't looking at imbalances that were going to be running through. You can see this here. Price just runs through that. When price comes and retraces, where's it going to go? To the imbalance. And what does it do? It goes through the imbalance. You could literally trade just with imbalances. Me looking at drawing out this chart like this makes me want to trade with just imbalances because we've already spotted 2 profitable trades which needed no stop loss. Just through trading imbalances. With that order block that starts. You don't even need to backtest like with the replay. Just go back into historical data, draw out imbalances where prices running through, order blocks, sweeps of liquidity, the daily bias. So an imbalance, an area where price has been heavily bought heavily sold, creating that gap, fair value gap, imbalance, solid area for price to retrace to, or to run through, follow liquidity, order block, where price, the candle where price changes trend, the start of a change in trend, where there's been a lot of buying or a lot of selling for the market makers, for the banks. This right here would be an easy spot for the banks to buy. And that's like an 80 pip move. But we can use this to our advantage. Even though the banks are most likely selling. You know, they're doing a bit of both. One thing, if you didn't know, hedge funds and stuff like this. So say if you buy, they'll sell. If you sell, they'll buy. Because they know that 8% of traders fail. So that already, they've got an 8% win rate. It's crazy, man. Daily bias. I don't, you don't start your trade for the month. Like, you chart up on the monthly and get your psychological levels and everything drawn out. But obviously we're intraday traders, so we want to really be like mastering the daily chart. We want to like seriously be mastering it. Imbalance, whenever imbalance, order block, daily bias, and I'll go through sweeps. Just a quick video, this one, boys. But yeah, daily bias. So what do we see here? When we look at the bigger picture, we can see my downtrend. So what we're doing, we're following the down. Here, that's an easy place to buy back up to the trend line. But now we're around the trend line. We're either going to break through, or we're going to come low and keep coming lower. Look at this right here. Weekly candle imbalance. That's crazy right there. That's crazy. Weekly candle imbalance again. Easy things. Price can run through all of this liquidity, boys. See what I'm doing right now? Drawing out the liquidity, the zones where price can come to. You could literally trade from liquidity pool to liquidity pool, and that right there is a strategy in itself. But yeah, look at where the price is going. Really like spend a lot of time on the daily chart, the 4-hour chart, the weekly chart. See this mini trend line, the outer trend line and the inner trend line. If we respect this, that's easy sells, bullish order block down here. Look at that, bullish order block. Perfect place for price to come and retrace to, and then we could tap off this bullish order block and keep going, tap to the inner trend and keep pushing, or we could come back lower. Endless possibilities, but we keep it simple and we make sure that we're always trying to get on the right side of the chart. We're not rushing, we're not using the wrong bias, we're not over trading, we're not FOMOing, we're being patient and we're following our strategy, boys. We're finding the daily bias, we're looking for the imbalances, we're looking for the sweeps of liquidity. Yeah, really go slowly through these, man, and really find the overall bias. See, the lower time frame we get, the lower we get, the more bearish the chart's getting. And this is exactly what we want. 1, 2, 3. Price could either break through or could drop. Simple. Weekly imbalances for price to run through. So what we're looking for right now is only sells. And we're just looking for the best time to sell. We could get a nice retracement high, and then that's a perfect place for banks to start selling and start dropping the currency. It's very, very, very simple. I'll go over sweeps of liquidity and then I'm going to end this video off. The sweep of liquidity is basically where price purges liquidity and then drops to the opposite side. So right here is a perfect example. Actually, bro, I don't know how that guy. Some guy was like using this and then he was getting it perfectly straight, and I don't know how. But yeah, sweep of liquidity. Price comes up, taps a trend line, it purges this liquidity pool, liquidity high, liquidity high, liquidity high. This got taken by this, and that's why when you see this tap, when price comes up and takes this liquidity, it then distributes it to the downside. Price comes up, sweeps out key high on the hourly chart as well. Where's it going to go? Distributing it to the downside. Because see how we slowed down? If price just purged it and then was going to keep rallying to the upside, we wouldn't have had this mini consolidation. Price would have just kept going. But when you see this slow down and then they distribute to the downside, that candle right there, easy sells. Back down to the zone. Weekly imbalance we got here. There's that candle. That's for 180 pips. Like, come on, boys, 180 pips. That can be fun now. But, you know, we got this, boys. Liquidity sweeps. Liquidity gets swept here, distributes it to the upside. Liquidity gets swept, distributes it to the downside. But we want to be looking for the main sweeps. The sweeps like that where price has been uptrending, sweeps a major high, and then starts distributing to the downside. Like we got on here, where the bullish block gets created, we also get a main sweep. There'll be some type of major low somewhere. See how price sweeps low, the bullish order block gets created, and then we start distributing to the upside. Following the daily bias, following the trend line. What's that right there? 490 pips. Do you know how crazy that is, boys? That's a lot. That's seriously a lot right there. I'm going to wrap that up anyway. But I'll see you boys in the next one. Leave a like, leave a sub. Yeah, man. Hope you get some value.